All right, we are right up against the close. We've got 2 minutes before the bell sounds, and it is time for the closing countdown. Bob Pisani on the floor of the New York Stock Exchange. Robert, take us home.
And we need, what, a quarter of a point, Maria? 1325.48. We're at 5-year highs, folks. Who cares about a quarter point? We're there. All right, why did the market rally? Number one, benign Fed comments. That helped. We went down a little bit, came back late in the day. Number two, great earnings reports from companies like Circuit City. Darden Restaurants had a great report as well. Third, lower oil, 6-month lows on oil. Finally, look at that 10-year, 4.7% continues to decline. These trends will continue to hold on here in the market. Lower oil, lower interest rates helping out here. Look at those energy stocks, Maria, 3-4% down. Anything having to do with natural gas, anything having to do with drilling for natural gas, anything with refiners are a little bit on the weak side. That market is clearly taking money out and putting it back into what? Tech stocks. Tech rally held on. We had a slight attempt at selling off late in the day on some overbought conditions, but it didn't really matter. The bottom line is the bullish situation is still intact. Let's call it 5-year highs in the S&P, even if we're a tenth of a point to the downside right now. Hey, ringing the closing bell, the president of Georgia. We have a lot of international dignitaries in town for UN Week. H.E. Mikhail Saakashvili is here, the president of Georgia. And that's the closing bell. And you know who's up next? Maria Bartiromo.
Hi, everybody. A powerful rally on Wall Street today. Stocks rising all day and ending near the highs of the afternoon, sparked by strong earnings, lower interest rates, and another significant drop in the price of oil. The S&P 500 sitting at fresh 5.5-year highs. Take a look at the Standard & Poor's, up 0.5% at 1325. That is a 5.5-year high. We did see some initial disappointment in the marketplace earlier today after the Federal Reserve left short-term interest rates steady at 5.25%. However, the Fed left the door open for further increases if inflation pressures persist. Checking on how the major indices are settling out tonight, the Dow about 100 points away from its all-time high at 11,613 today, gaining 72 points. NASDAQ Composite also finishing strong on the back of strong earnings from Oracle. 30 points higher on NASDAQ, 1.33% at 2252. And the S&P 500 today picked up 7 points, 0.5%. Take a look at interest rates. The yield on the benchmark 10-year note falling to a 6-month low. That is 4.72% on the 10-year. And another down day for oil prices as well. A positive for equity is the sell-off driven by news of rising supplies here in the United States. Gasoline inventories rising for the 5th straight week to their highest levels since January of 1999. Also, heating oil and diesel fuel inventories posting better than expected gains last week. That news overshadowing a drop in crude inventories. Take a look at light sweet crude. It sank beneath the $60 a barrel level earlier. It finished down 2% at $60.46 a barrel. It is now around the lowest level in about 6 months, as you can see from that 6-month chart. Bob Pisani, all over equities today. Our eye on the floor of the New York Stock Exchange. Bob.
You know, the S&P could cooperate a little, Maria. The closing 5-year high is 1325.6, I believe. Where are we? 1325.2. All right, let's not go crazy over. Folks, we're essentially at 5-year highs. Let's not get too technical at it. What happened? Why did the markets move up? There are 4 major reasons for them. First, we had a benign Fed commentary in the middle of the day. What did they say? Core inflation has been elevated, but prices should moderate over time. That's pretty dovish commentary. That helped the markets. Really didn't move too much, but still, those are positives. Second big thing, strong earnings. Third, lower interest rates. And fourth, lower oil, as you saw from Maria there. Those 4 factors combined. Earnings were especially important earlier in the morning. Darden came out really strong. They own Olive Garden. They beat the estimates. They raised their earnings growth forecast and boosted their dividend. Morgan Stanley, again, 4th big brokerage firm to beat their earnings. They did well. Circuit City beat the expectations. Strong sales of flat panel TVs and laptops. And CarMax, used car sales particularly strong. They beat the earnings and they guided higher for the full year, as you can see, to the upside, all except Circuit City, which slightly to the downside late in the day here. Energy stocks, another ugly day. It was a simple pattern. If you had anything to do with natural gas in any way, like you were an exploration or production company like Cabot or XTO or Devon, or you were a refiner somehow of gasoline like Sun or Valero, you were weak again today. All of those stocks moved to the downside. Finally, Walmart Walmart made an announcement in the middle of the day that had a lot of people trying to figure out what's going on. They said they are going to announce a major health care initiative tomorrow. They didn't say what, though. There is some speculation it would be either one, a template for a new health care insurance policy. Remember, they've gotten slammed on that in the past. One trader even speculated it could be something really novel, like walk-in medical clinics. Wouldn't that be something? Anyhow, Walmart's sitting at a 4-month high. Maria?
All right, Bob, thanks so much. Let's get more on the market's reaction to the extended pause at the Fed. Bianco Research President Jim Bianco joins us, along with Nuveen Investments Money Manager John Miller and CNBC Senior Analyst Ron Insana. Gentlemen, nice to have you on the program as always. Good to have you. And let me kick it off with you, John. Have you made any changes to your portfolio in the last month as oil prices have come in?
Over the last several months, we have been keeping our duration at or slightly longer than the benchmarks that we